Good morning. Um, Welcome to today live trading section with Vetexx. Welcome to today live synthetic trading section. And today we are going to be analyzing the synthetic market and using pure technical analysis and price action. So if this is your first time of watching or joining this live session, my name is Vetexx, and what I do on this channel is I analyze the synthetic market every day using pure technical analysis. All right, show you how I trade basically, and then you learn from my analysis. And whenever you're having question, you can always ask your question in the comment section. And I also offer uh, a Telegram channel where I drop updates, drop setup, so that you can always learn from it. Okay, so today we are going to just dive right into the chart, show you how I trade basically, and how you can learn. So as in the process of the analysis, the process of the technical analysis or this live stream, if you're having any question or confusion, do well to ask your question in the comment section and I will always answer them. All right. So if this is your first time of joining, don't forget to like, don't forget to share, and most importantly, subscribe so that whenever I go live, you'll be the first to get notified. Okay, so without wasting much of our time, let's dive into the charts. Let me show you how I trade, and then let's do analysis together and see what the market has for us today. Okay, so I'll be sharing my screen right now, and then we'll see what is happening. Okay, so first of all, we have about 14 pairs that we analyze every day. So currently we analyze just the volatility indices and the step indices at the moment. So we are going to check everything step by step. Basically, we don't just we trade professionally on this channel, on this analysis. We do better analysis. We look out for quality setup, and then we take good trade. We don't just take random trade. So just follow me step by step. Whatever system you are using, whatever trading strategy you are using, if you follow the process I use using my, if you follow the approach I use using my own trading method, you can also replicate the same thing, and you'll see, you will discover some changes in your trading results. So let's dive right into the charts. So the first pair we have today is uh before then, okay, before then, for those of you joining me for the first time, we trade, the system we use is called the advanced market structure. Okay, we trade basically the advanced market structure. So the trading pattern is basically we looking, it's just like structure and liquidity. Structure, liquidity, point of interest. So it's basically something like this. This is what you trade every day. So the pattern comes like this. Okay. We always have a high here, which is we consider it as our sweep, and then we always have a high here, we consider it as our liquidity, and we always want price to take it at which therefore we have rules of the advanced market structure. There are five basically. So first of all, we have this high here that need to be taken out. Okay, it is called our transactional liquidity used for correction. So this high need to be taken out. It's called sweep of liquidity. So once you see the pattern form like this, remember this high has been taken out, it has been sweep. Okay, so this is what our first sweep of liquidity, which is rule number one, to give us this protected high. Okay, and now this low here needs to be taken out to give us our what first break of structure. Now this is what happened. Okay, it has been taken out. Now this is our first break of structure. Rule number one, sweep of liquidity. Rule number two, first break of structure. And rule number three, price should retrace 50% to give us what another liquidity, and this liquidity is considered to be called structural liquidity. And this liquidity come down here to take out this newly created low to give us what our second break of structure. Now this is our liquidity one, this is our liquidity two, this is as this liquidity now has been taken out, continue to the opposite direction now to give us this first break of structure. Now price has retraced 50% again, right? Give us what structural liquidity. Now this structural liquidity, it is used for continuation, but before that, price need to take out this low to give us what our second break of structure. which is this. Okay. Now remember I said this liquidity, which is rule number 3, is used for what? Continuation. So price will need to move back into the zone, take it out, tap into the point of interest, and continue the move to the opposite what? Direction. So basically this is what we have. We have rule number 1, sweep of liquidity, rule number 2, first break of structure, rule number 3, 50% retracement give us what? Structural liquidity, and rule number 4, second break of structure, and rule number 5, price take out this newly created liquidity and continue to the opposite direction. So this is exactly the trading model with trading pattern we use every day. So this is it. First of all, we have this sweep here. Second of all, we have first break of structure. And rule number 3, price retrace 50% to give us structural liquidity. Rule number 4, we have our second break of structure, and then this is our protected high. So the whole of this zone becomes what? Our point of interest. This is our point of interest. Now what does price do? Price tap into this point of interest after taking out this liquidity, and it continues what? To the opposite direction. Okay, so this is basically what we look at for every day in the market, and this is what we trade. With our TP is above our protected high, then entries at the end at this liquidity level, and then our full TP is this newly created low. Okay, so this is what to look at for when you're analyzing trade in the market every day. So basically, we used to do what they call first of all, we do what they call, before every setup, we always do what they call top down analysis. Okay, so top down analysis using different time frame. Okay, so this pattern combined with other time frame, okay, we do what they call top down analysis, whereby we analyze our market from the higher time frame, then we scale to the lower time frame for our continuation. Okay, so this is weekly time frame. For example, if we have this as weekly time frame, or let's say we have this as daily time frame. Okay, now this is something that we normally look out for. Take for example, this price tap into a if this price tap into a 24-hour time frame uh, point of interest. Okay, this is, let's say this is a weekly time frame point of interest, or this is a daily time frame point of what? Interest. Okay, we consider this as daily time frame point of interest. If price tap into this point of interest on a daily time frame, all right, what we do next, because we are doing top down analysis now, this gives us what? A direction that price is reacting from this zone, and then this is going to be the finish point. Okay, this is the starting point, and this is going to be the finish point. Take for example, this is a 24-hour time frame or a weekly time frame. Remember, this condition I'm about to give you, it works. You apply it whenever you do your top-down analysis on a 24-hour time frame or your weekly time frame. So this is a 24-hour time frame, for example. This is what you do. You look out for another continuation structure on the 4-hour time frame. You wait for price to give you something like this. Now this is 24 hours. Now you wait for price to give you a continuation like this on the 4-hour. Now this becomes your what? 4-hour continuation. Okay, so after you spot your pattern on the 24-hour, you wait for price to give you a continuation on the 4-hour, which is like this. Okay, after price have done this on the 4-hour, now you can scale down to the 1-hour time frame for your continuation. That is when you begin to execute on those time frame. 1 hour, 30 minutes, 15 minutes. Okay, so basically you have something like this. So after price has given you a daily time frame structure or a weekly time frame structure, you scale down to the 4 hour time frame and spot your continuation structure on the 4 hour or on the 1 hour. So once you get that, you then scale to the 15 minutes time frame or 30 minutes time frame to look out for your continuation pattern again, which is going to form like this on the lower time frame. So once it gives you this continuation, the lower time frame, price will come to this POI here. That time you can execute on your POI using your confirmation entry, and then you hold price to the target. Okay. Now your target on this time frame is going to be, this is the 4 hour zone, this is a 15 minutes continuation. Now you're going to start selling on this 4 hour zone from this point to this point. Okay. So whenever this 4 hour low is taken out, you sit out and wait for another structure like this on the 4 hour or on the 1 hour until this target on the higher time frame, on the 24-hour time frame or weekly time frame is taken out. So this is basically what we do every day. So in the case that we didn't see this structure on the 24-hour time frame or on the weekly time frame, but we'll spot it on the 4 hour time frame, provided that the trend is bearish or bullish, and we'll spot our pattern on the 4 hour time frame, on the 1 hour time frame. That time you can scale to the 15 minutes time frame or 30 minutes time frame, all right, and take your continuation and look out for your continuation on the lower time frame. Okay, so this is how top down analysis work. You look out for price from the higher time frame, then you scale to the lower time frame for your continuation. So this is what, so regardless of the uh, trading strategy you use, okay, if you apply this top-down analysis uh, method, you are going to see some changes in your trading. Okay, so this is basically what we do every day. So we are going to be diving right back into the chat, and then let's see the first pair we are going to be checking out today. So I believe you understand this. So if you still don't get it clear, you go to the playlist of this channel where I explain the whole system right there. You can just spend your time there. You get to understand a whole lot of things. But for the purpose of this live analysis, what we do basically is just look out for setup, mark the valid ones, drop it in the Telegram community, and do a follow up there. So I've done all the work for you, just for you to go to that playlist, watch those videos. Wherever you're having issue, you can message me on Telegram. Okay. So let's check out the first pair in our list today. We are going to be analyzing. So have this at the back of your mind, because I'll start marking the whole of this thing from those charts. Now I won't be explaining it step by step again. Okay. So what you look at from the higher time frame, scale to the lower time frame, and then you go to your 15-minute structure. If you see this on the 24-hour, you wait for this same thing on the 4 hour, and then wait for this same thing on the 15 minutes under that, inside that 4 hour. So it's basically it's higher time frame to the lower time frame, then execution. So I'll go to the first pair on our list, which is V51S today. Let's check what the pair has for us. So on the weekly time frame, based on that structure I just explained, the trend is bullish on the weekly time frame, but it has smashed the target. Okay, it has already smashed the target. And what do we do? Since it has taken out the target on the weekly time frame because it's bullish, right? Now we are going to start anticipating another uh, time frame setup. Okay, now on the 24-hour time frame, it's giving us another structure, but let's mark this out if it is up to 50% retracement. If it's not, we are not going to mark it out as our setup. Okay, this is not actually valid. Now let's go to the 4 hour time frame and see if you are going to spot a continuation on the 4 hour time frame. A buy continuation. Remember, we didn't see the structure on the 24-hour time frame, and it has already smashed TP on the weekly time frame. Now what do we do? Let's go to the 4 hour time frame if you are going to spot any continuation structure. Okay, we have a buy here. If you can, if you stretch your eye very well, you see that we have our sweep of liquidity, which is row number one, and then we have row number two, which is first break of structure. Okay, and row number three, price retrace 50% to give us structural liquidity, which is this. And then row number four, we have our second break of structure. This becomes our what, protected low. Okay, And the whole of this zone is what? Our point of interest. Now we are anticipating rule number 5. So once rule number 5 tap into this POI on the 4-hour time frame, okay, we are going to be anticipating this buy continuation like this. Okay, we're going to be anticipating a buy continuation like this. So this might give us series of buy until it take us the target. Okay, we're going to be anticipating like this. So once price tap into this point of interest, we are going to scale down to the 15 minutes time frame or the 1 hour time frame and anticipate sales. Okay, and anticipate more sales. So this is what we are going to be anticipating once the price do like this. So once price tap into this, do not set your limit entry. Don't try to enter at this point and wanting to catch early entry. Wait for price to give you continuation on the lower time frame, then you can execute. And once price take out the target on the lower time frame, you take your profit and wait for another continuation to form until this target on the 4-hour time frame is taken out. Okay, okay. Now let's say this structure we are anticipating now is 24-hour time frame. Let's say this structure is 24-hour time frame. Now you are going to, after price tap into the PO on the 24-hour time frame, you're going to wait for this continuation pattern to form on the 4-hour time frame. Okay, so once it's formed on the 4-hour time frame, you can then scale to the lower time frame on that 4 hour after tapping into the 4-hour point of interest, and then wait for your continuation on the 15 minutes time frame before you can start executing until price take out that 4-hour time frame structure. But right now that this is the 4-hour time frame structure we are anticipating. Once price tap into this POI, we are going to scale to the 15 minutes time frame and start anticipating our entries until price take out the target on the 15 minutes time frame entry or 30 minutes time frame. You see that the TP of this structure, I put it here. I did not put it here. Okay, because price might take out your lower time frame target and reverse to your entry, stop you at and move to your target. So this is the reason why the situation is like this. I believe this is clear enough. So the next, this is what I'm anticipating on V50 currently. So we'll be on the lookout until what we are looking for happen. So let's go to the next pair, which is V15s. So V15s now, I'm just basically going to mark it out since I believe you have gotten a more clearer understanding. So on V15s, the daily time frame is bearish, and the 4-hour time frame structure one just smashed its targets recently, and then we have a 1 hour continuation currently. So we're anticipating this sell on the 1 hour. So we have our sweep here, which is rule number 1, and then rule number 2, which is here, first break of structure, which is here. And then rule number 2, we have price retrace 50% to give us structural liquidity. And rule number 4, we have what our second break of structure, right? Now we're anticipating rule number 5 to tap into this point of interest, right? Tap into this point of interest on the 1 hour time frame and give us continuation on the 15 minutes, 30 minutes, or yes, between 15 minutes, I stick to just 15 minutes and 30 minutes. So until price do that and sell to the opposite direction. So this is going to be the finish point, and this is going to be the starting point, and this is going to be the finish point. Well, if price doesn't do that, we have another continuation. If price doesn't respect this POI, we are going to be taking we're going to be sticking to this 4-hour what time frame. Okay, we have a 4-hour time frame here. Sweep, first break of structure, second break of structure, structural liquidity, point of interest. So if price doesn't respect, price might come here, react, and then go to this zone, and then start giving us 15 minutes confirmation, 15 minutes continuation, 30 minutes continuation until price take out this target. So this is what we are anticipating currently on this time frame. So let's go to the next pair, which is step 200. Now what you are going to be doing now is just marking down those structures and then moving on to the next one. Once we didn't see what we are looking for, we just move to the next one. So step 200, starting from the 24-hour time frame, step 200 has been bearish, and if you look closely, we have we have our structure here on the 24-hour time frame. So we are going to anticipate this recent 24-hour time frame structure. We anticipate this. If price doesn't come here, we are going to be anticipating this. So let me just mark it down. Then I'll go to the lower time frame if there's anything we can also anticipate here. So this is our row. We have all this. So we are anticipating price to come into this POI and sell the opposite direction. But if price we are going to be waiting for this. So let's check the 4-hour time frame. There was a setup we marked down a few days ago. So we wait for it to trigger. If it does trigger, we are going to let me check this. Oh, okay. We also have this on the 4-hour time frame. We have a sweep here. We have our protected high right here. We have first break of structure, which is this. We have a structural liquidity, and then we have second break of structure, which is this. Remember, this is 4-hour time frame, so this is more good, this is more better. Okay, and then this right here becomes our point of interest. So this is what we have on step 200. So price will definitely do this, come here, and then start pushing to the opposite direction. Then that time we can scale to the 15 minutes time frame or 30 minutes time frame and start looking for more entries until price take out this target right here. Okay, so let's move to the next on our list, which is V25 index. Let's check out V25 index, right? V25 index on the weekly time frame is bearish, and then we are anticipating a move on the 24-hour time frame. So there is nothing on the hourly time frame of V25 index. So this is what we have. On the 24-hour time frame, we have this. So we are going to be waiting for this. This might take some days to come here, to come to the POI and trigger. But regardless, trading is all about, it's a 90% analysis, 10% analysis, 90% waiting. So this is what you are going to be anticipating. These are first break of structure, sweep of liquidity here, first break of structure, we have a protected high, price retrace to give us our structural liquidity. So we have this here, and then we have what our second break of structure. Now we are anticipating row number 5. This is our point of interest. So we are anticipating row number 5. Row number 5 to come here and then give us this is, remember this is 24-hour time frame. So row number 5 will come here, then give us what? A 4-hour continuation. Which is going to be like this. Okay, going to give us a 4-hour continuation. So once you give us a 4-hour continuation like this, just like this 24-hour, we will now take our we'll scale to the lower time frame to take entries on the 15 minutes time frame, just like this. All right, so this is what you're going to be doing. I already explained this, not quite long. So this is what I'm basically going to be doing. Yes. So this is our 4-hour POI. If price tap into the zone, we're going to have a power POI like this, and then we'll go to the 30 minutes time frame or 15 minutes time frame to have our continuation like this. So this is our entry. Our entry is going to be here. our take profit level is here. So this is what we are going to be doing. So I believe this is quite simple. Okay, this is it. 24-hour time frame point of interest, scale down to the 4-hour time frame, find another point of interest on the 4-hour, 1 hour, and then go to the 30 minutes or 15 minutes and then look out for your entries. Okay, look out for your entries right there, and then you write it to the take profit level on the 15 minutes time frame, and wait until price gives you another one, so you can take series of sell until price take out this 4-hour time frame target, and then wait out for another hourly time frame. Once you confirm, you start looking for sales on the lower time until this overall time frame on the 24-hour time frame is taken out. Okay, so now let's check the next pair, which is step 100. Step 100, step 1. Okay, let's check step 100. Oops. On the weekly time frame, step 100 smashes the target. It's not quite long. Smashes the target. Not quite long. On the 24-hour time frame, we don't have anything currently on the 24-hour time frame. Let's go to the 4-hour time frame and see what we have. On the 4-hour time frame still, we do not have anything on the 4-hour time frame. Oh, nothing really. So let's go to the 1-hour time frame. The 1-hour time frame, can you spot anything? Okay, okay. On the 1-hour time frame, I think we have something tangible on the 1-hour time frame. So first of all, we have what sweep of liquidity on the 1-hour time frame, and this is our what protected high. You have what first break of structure, which is rule number 2. Rule number 3, price retrace 50% to give us for structural liquidity. And rule number 4, we have what second break of structure. Now what's next? This zone becomes what our point of interest. So point of interest means the point you are interested in. Okay. Now price will have to retrace back to this zone. Once price tap into this zone, to give us continuation on the 15 minutes time frame. Okay, once price give us continuation on the 15 minutes time frame like this, we can start taking sales until this target is taken out. If this becomes the target, okay, if this becomes the target, until the target is taken out, then we can stop looking for sales on the lower time frame. But for now, we are going to be waiting for step 100 on this time frame. So we anticipate that move, but to give us that good. So this is what we are going to be looking at for on step 100. So let's check out the next pair, which is step 500. Let's see what's happening on step 500 real quick. So on step 500, starting from the weekly time frame, step 500 is bearish, right? And on the daily time frame, it's also bearish. And then what we need to do now is get to the 4-hour time frame and see if we are going to find our continuation that is respecting currently. Okay, so this zone here, this zone was, we have our pattern, our continuation here at the moment. Price sold to this zone. I think this is already oversold. This should be considered as oversold, and then it retreats. Okay, now we are going to start looking for continuation on the 15 minutes time frame, because it's always normal for price to sell and retrace back to POI and then sell to the target. So currently we have this. We have this. So we are not going to be bothered about this retracement until this high is taken out. Sorry, until this high here is taken out. Okay, and this target is taken out, then we will know that we won't have any business with this time frame again. So this is what we are anticipating. This is what we have on step 500. We have our sweep. We have our first break of structure, which is this. we have this protected high, and then we have our structural liquidity. Our second break of structure shows here, and this zone becomes what our point of interest. So now that we have this, let's go to the 15 minutes time frame and check if you are going to find a continuation setup on the 15 minutes time frame. On the 15 minutes time frame is unfortunately we have nothing currently. We don't have anything yet on the 15 minutes time frame. So nothing is happening on the 15 minutes time frame. So currently there's no setup on step 500. Okay, and we are going to move to the next pair, which is what V100, 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 V100. So V100 is bearish on the weekly time frame. Give us a structure on the daily time frame. So what we are going to be doing now is marking it down. So first of all, we have our super of liquidity. Second, we have our first break of structure, which is rule number 2. All right, and then this is our rule number 3. Price retrace 50% to give us structural liquidity that needs to be taken out, so price can move to the opposite direction. And rule number 4, we have what second break of structure, which is this. We have our second break of structure, and this zone's what becomes our what point of interest. This zone becomes our point of interest. So on a normal people, other people might set their limit entry in this point of interest and then start selling, because this is the starting point and this zone here is the finish point. Okay, but it's not advisable to do that. Now that we know that price has tapped into the 24-hour time frame point of interest, the next thing for us to do is scale to the 4-hour time frame and check if we find a continuation. Once we know that we've gotten a continuation on the 4-hour, and then that is when we can begin to anticipate for sales on the 15 minutes. So there's nothing on the 4-hour yet. Let's check the 1 hour if we find a continuation. So currently there's nothing on the 1 hour too. So we are going to be watching, we are going to come back and check if you find what you are looking for on this time frame. So let's check out the next pair, which is V30X. So V30X currently is bearish on the 24-hour time frame. It's bearish on the 24-hour time frame. We already have our markouts here, which is number 1, we have sweep of liquidity. Number 2, we have first break of structure. Number 3, we have price retrace 50% to give us structural liquidity. And number 5, sorry, this is number 1, sweep of liquidity. Number 2, first break of structure. Number 3, rule number 3, price retrace 50% to give us what structural liquidity that needs to be taken out. And then rule number 4, we have price giving us taking out the newly created low to give us what our second break of structure. And then rule number 5, price tap into the point of interest and continue its move to the opposite direction. So it tap into this point of interest, continue to move to the opposite direction. Now that we know that, now that we know where price is coming from and where it's going to, which is this, okay, which is this. We are going to continue the sell to the opposite direction, which is here. Take for example, not for example, let's go to the 4-hour time frame and then look if we are going to see continuation setup. So on the 4-hour time frame, nothing at the moment. All right. And then let's go to the 1-hour time frame. Remember, we have this continuation structure here yesterday. Okay, this is why it's always advisable for you to wait for your lower time frame confirmation. You know, this lower time frame continuation setup is also serve as a confirmation for you to avoid taking unnecessary losses. So we have this yesterday on the 1-hour time frame. We had this, this, we had this. Then we have price retrace 50%. Now this becomes what? What? You can consider this as our structural liquidity and then second break of structure. Now, people that put their limit entry on this point of interest, we got stopped out. Why? Because it's advisable for you to wait. Some you might put your limit entry here because you want to do 1 to 10 RR, 1 to 20 RR, because this is a starting point and this is going to be the finish point. But price react, give you a small move and then invalidate it. A lot of persons who jump on this trade would have taken a loss. But it will be better for you once price start on this point of interest, you scale to the 15 minutes time frame and wait for price to give you a confirmation continuation on the 15 minutes time frame. All right. So price would have given you a continuation entry here. You would have price would have respected it. But since price does this and you jump into it, you would have taken a loss. So this is why it's always good for you to wait for continuation structure on the lower time frame, no matter how much hurry that you are in. Okay, you know that the higher time frame gives a higher return of uh, risk to reward, but it will be better for you if you are patient enough to wait for continuation on the lower time frame. This is a must if you want to trade well. Okay, so there's nothing happening on VTTS right now, so we are going to keep anticipating more sales continuation. Okay, on the 4 hour time frame, on the 1 hour time frame. So now let's check V90S. Let's check V90S real quick. What is happening on V90S? On V90S, we have something going on. Okay, let's start from the 24-hour time frame. Starting from the 24-hour time frame, okay, we have price is almost smashing the target. Okay, on the 24-hour time frame, we have our rule number one, which is sweep of liquidity. The first thing you do when you want to do your top-down analysis, just look at the structure. Look at if price is reacting from somewhere, look at where the price is coming from and then trace it, mark it. Okay. If it's valid, then you go to the lower time frame. But the most important thing before you take any trade, just know where price is coming from and then know where it's going to. Once you understand these two basics, it will become more easier for you to spot quality trade. Okay. So immediately I come to this chart, I saw a continuation. So I just mark out this pattern. If price is actually reacting from that zone. So this is what I see. So let's check if price reacted from the zone. Okay, you can see that price reacted from this zone. Okay, now that we know that price is selling on the 24-hour time frame, go to the 4-hour time frame. If you come to the 4-hour time frame here, let me give you a very clear good example. Now, if you come to this 4-hour time frame, you will notice that price give a 4-hour time frame continuation from this zone here. Okay, price give a 4-hour time frame continuation on this zone, which we have this. This is what we have on the 4-hour time frame. We have this. If you scale to the 1 hour, you see it more clearly. We have this. Okay, sweep of liquidity, first break of structure, structural liquidity, second break of structure, price tap into it. So if you scale to the 15 minutes time frame, you see series of sales until price take out this target. The same thing happen here. Okay, and then this is another one that happened here. We have our sweep of liquidity here. We have our protected high. We have first break of structure. We have structural liquidity. We have second break of structure. Price tap into this POI. You can see this here to here is our POI. Price is tap into it. And then this was the finish point. Starting point here. And then the finish point was here. So you see, price tap into it and take out the target. So once price tap into this zone on the 4 hour time frame, if you scale down to the 4 hour to the 15 minutes time frame, you will take up to 4 sets before price take out this target. So that is why it's always good to stick to the higher time frame bias, know where the price is coming from and know where it's going to. Once you understand these two, trading becomes more easy for you. Okay. Now let's check out the next pair, which is the V25 1S. The V25 1S has been bullish for the longest, has been bullish for a while. So let's check what we have on this time frame. So on the 24-hour time frame is bullish, no structure. Our pattern didn't fall on the 24-hour time frame. So what do? We go to the 4 hour time frame. On this 4 hour time frame, I've already marked out what we are anticipating. Okay, we have our sweep of liquidity, rule number one, and then our protected high here. Then rule number two, we have our first break of structure. Rule number three, price retrace 50% to give us structural liquidity. Rule number four, we have what our second break of structure. Now, what do we anticipate next? We anticipate row number 5. Our price should come into this point of interest, into this POI, tap into this point of interest, give us continuation on the 30 minutes or 15 minutes time frame, then we can start buying until price take out this target. And if price doesn't do that, okay, if price doesn't come to this POI, it will respect this recent point of interest. Okay, so the same thing that is marked here is the same thing that is marked here. So we're anticipating one of these two. Is the price come here or come here, then we'll start buying. It's as simple as that. Okay. So this is what you're anticipating. And if it comes, gives continuation, I will drop the setup in the community. Okay. So if this is your first time of watching this live synthetic trading analysis section, uh, do well to subscribe to this channel if you are getting value, and don't forget to join our Telegram channel where I drop setup updates of daily life analysis we do here. And also, if you are looking forward to trade the volatility in the synthetic indices with us, the link to register using the same broker I use is in the description of this video. Click on it, register, fund your account, and then let's take trades together. Okay, so moving forward, this is what we have on V25 1S, and this is what we are going to be anticipating. Okay, so until it does that, we'll be sitting on our hands for now. So the next pair we are going to be checking out is V75S. Let's check out V75S. Okay, on V75S, what do we have? What do we have on V75S? Uh, V75S, starting from the 24-hour time frame, we have a buy continuation. I think, yeah, we're anticipating a buy on this, a buy or a sell. Okay, clearly you can see that we have our rule number one, sweep of liquidity. Rule number two, we have our first break of structure. Rule number three, price retreat to give us our structural liquidity. This is our protected high. And then we have here second break of what structure. Okay. And this becomes point of interest. This is the starting point and this is the finish point. Remember, this is 24-hour time frame. Now let's get down to the 4-hour time frame and check if you see a continuation on the 4-hour time frame. Okay, so let's check the 4 hour time frame if we find the continuation. Uh, we have this, we have this here, we have this here, and then we're anticipating price to come to this zone and then start selling to the opposite direction. Give us continuation on the 15 minutes time frame and then start selling, start pushing to the opposite direction. So this is what we anticipate currently on V75 1S on the 4 hour time frame. But yesterday we spot a setup on the 1 hour. Let's check how it's going. If it has given anything tangible on that time frame. Let's check the 1 hour to see first. To see. Okay. So this is what we have on the 1 hour yesterday. We have this on the 1 hour, which is this. We have this. I hope you all are following. We have this too. We have also this. And then we have our POI on the 1 hour time frame. This is what I always talked about. Okay. Now this is our starting point and this is our what finish point. Okay. So once price reacts here, the next thing for you to do is go to the 15 minutes time frame. Let me show you something real quick. Let me show you something real quick. Okay. Now look at this. After price is selling, we go to the 15 minutes time frame. Can you see? We have this. We have a sweep of liquidity here. We have our protected high. Okay. Watch closely. This is 15 minutes time frame now. Okay. Then we have our protected high. And what? We have our second break of structure. And then this is what? This is our point of interest. This becomes our point of interest. Okay, on this point of interest, price tap into our 15 minutes time frame POI. Look at what it did. This is work of art. Okay, and then what did it do? This is the target, right? Now, once price tap into this 15 minutes POI, what did it do? Sold to the opposite direction. Did it smash TP? Of course it does. So this trade now, if you hop on it, it will have given you nothing less than 1 to 6 RR. I want to 1 to 3 RR is somewhere at this zone. So this is beautiful. So this is what we do. This is how we catch continuation setup on the higher time frame. This is the best way to trade continuation. Okay, not you, because from this now you can catch more sales until the target is taken out. So this is what we have on V75 one index. So we are anticipating more sales on this time frame. So price will definitely do this again. Let's anticipate price might do something like this here again and then do like this. Okay, continue to this PY and sell. Okay, because clearly you can see we have our sweep here, protected high, first break, this will be second break, and then this is going to be our point of interest, and price will sell. So we anticipate this move too. Let's anticipate this move. Hopefully something great happen here. We use it to end the week. So let's anticipate this move on this setup that is forming. So if it does what you anticipate, good. If it doesn't, we'll still be on the lookout. So let's check out the next pair, which is V10S. V10S is bullish on the weekly time frame and then bullish on the 24-hour time frame. So let's get to the 4-hour time frame. If you get to the 4-hour time frame, because we check it yesterday, there's nothing on the 4-hour time frame. So let's use what we have on the 1-hour time frame instead. On the 1-hour time frame, we have this. So we anticipate price to tap into the 1-hour time frame point of interest and continue to move to the opposite direction. So we have our sweep here. We have our first break here. We have our resulted structural liquidity. We have our second break of structure. And then this is our what? POI. This zone is what? Point of interest. So we anticipate price to tap into this zone and start giving us continuation, just like how I explained on V75 1S, not quite long. So this is what we are anticipating on this time frame. Okay, once it does this, then we are rest assured that okay, there will be continuation and there will be buys. Okay, let's check V75 index. V75 index has been tanking for a while, doesn't have anything tangible. But regardless, we are going to check from the weekly time frame is bearish, 24-hour time frame bearish, 4-hour time frame is bearish too. Let's check. There's anything we can hold on to. 4-hour time frame is bearish. We don't have anything to anticipate. Let's check out the 1-hour time frame. Once we don't see on the 1-hour time frame, we are done with it. Okay, as you can see, there's nothing on the 1-hour time frame. So let's check out the next pair real quick. Next pair is step 300. Let's check out step 300. Step 300 is bearish on the weekly, bearish on the 24-hour. On the 1-hour time frame, don't know what. Let's check out the 1-hour time frame. Okay, this is what you have on the 1-hour time frame. First of all, we have our sweep. We have our structural liquidity, first break of structure, second break, and then our point of interest. Price has already tapped into the point of interest. So let's go to the 15 minutes time frame and check if you are going to see our continuation on the 15 minutes. You can't spot any 15 minutes continuation. So we'll go to the next pair. Which is V50. Starting from the 24-hour time frame of V50, V50 is bearish. On the weekly time frame, it's also bearish. So let's check it out. Marking it out real quick, we have our sweep here, and then we have our protected high right here. Okay, we have our first break of structure, which is this. We have our protected high, which is this. We have our second break of structure, which is this. This becomes what? Our point of interest. The starting point, and this is the finish point. Okay, now we know the direction on the 24-hour time frame. Let's go to the 4-hour time frame and check if you are going to spot any continuation on the 4-hour time frame. So this is the recent time frame we are going to be spotting. Let's check the 1-hour time frame. We are going to be working with the recent point of interest. So we have this, we have our row number one, sweep of liquidity, row number two, first break of structure, row number three, price retrace 50% to give us structural liquidity, row number four, we have second break of structure here. This becomes our what protected high. The whole of this zone becomes point of interest. So we're anticipating price to tap into this zone on the 4-hour time frame. Okay, once you tap into this zone on the 4-hour time frame, you can then anticipate more sales on the lower time frame, which is the 15 minutes or 30 minutes, until price take out this target. Okay, so this is what we'll be anticipating. So now let's check out the next pair on our list, which is V100S. Let's check out V100S and see. V100S is bullish on the weekly time frame, bullish on the 24-hour time frame. So now that we know the direction like that, let's go to the 4-hour time frame and check if you are going to find our system. In the 4-hour time frame, you can't see anything. Let's go to the 1-hour time frame and check if you are going to find what we're looking for. Okay, on the 4-hour time frame, on the 1-hour time frame, we have this. Row number one, we have sweep of liquidity. Row number two, we have structural liquidity as first break of structure. Row number three, price retrace 50% to give us what? Structural liquidity. This is our protected low. Row number four, price give us what? Second break of structure. And then this zone becomes what? Point of interest. Now, we are anticipating price to come into this zone in the 1-hour time frame and give us a continuation on the 15 minutes time frame like this. Then we can start buying to the opposite direction. Okay, so this is what you're anticipating on V100S. You anticipate this on V100S. Okay, so this is what you're anticipating on V100S. Believe this is clear enough. Okay, tap into this hourly time frame POI, scale to the minute time frame, which is the 30 minutes, 15 minutes, and then start taking buys to the opposite direction. So let's check the next pair, which is step 400. Step 400, let's check the 24-hour time frame. On the weekly time frame, step 400 is bearish. On the 24-hour time frame is bearish. But the reason why we can't see any trade on it currently is because of the fact that it is not starting giving us a direction on those time frame. It's just trending bearish. So let's go to the 1-hour time frame if you are going to spot anything too. So currently we don't have anything on step 400, right? So far so good. We've analyzed 14 pairs, and based on top down analysis, we haven't gotten a valid setup to work with at the moment. That is why you need to be in the community, so that whenever I drop setup, okay, whenever I drop setup, okay, because I'm always monitoring those uh, pairs. Okay, so whenever any set of fund, I'll drop in the community so that you can also see it and join it, because I only come live at the moment once a day, which is 6 a.m. to 7 a.m. So if you are watching this and you are here to join the Telegram community, do where to join so that you don't miss out on setup, when to enter trade, when to get out of trade, and trade together on the community. So today we've come to the end of our daily life analysis. I'll see you guys tomorrow, same time, 6 a.m. to 7 a.m. And we're going to be checking what the market has for us tomorrow. So throughout the end of today, if anything shows up, I'll drop it in the community. And if you are yet to have your account with Deriv Synthetic Indices, all you have to do is check the description of this video click the link, register, fund your account, and then we can take trades together. So I will see you on the other side. Same time tomorrow, 6 a.m. to 7 a.m. Peace out.